Hi everyone, and welcome to yet another TriZetech sponsored webinar. Here's Jonathan from TriZetech, and once again I will be your host for today's session named Beyond Decision Models Using Technical and Business Standards to Transform Financial Services. Our panelist, Brian Stuckey, is at his second time on the webinar. He came in last year to discuss how traditional methods in financial services won't do it moving forward. Today, he's here to present a powerful approach to handling FinTech and REGTECH solutions. But before, as usual, let's have a look at the agenda. So we have 60 minutes together. I will borrow only a few to present TriZetech very quickly. I will then introduce our panelist. His presentation should last about 40 minutes, so we will have around 15 minutes at the end for answering questions. Speaking of which, please don't hesitate to use the questions section of the GoToWebinar control panel at any time. And we will get to your questions at the end. And one last thing, this webinar is recorded. You will get access to the replay later today when we finish uploading it to our website. So TriZetech is an award-winning software solution provider. With the Digital Enterprise Suite's visual modeling and automation capabilities, organizations are in a unique position to transform their business, not only to be more efficient and effective, but also more agile and innovating and improving customer experience, which is so important today. So at the bottom of the slide, you can see all the tiles are representing the suite's components. So as you see, it's a very broad solution. We support a lot of varied digital transformation projects. You can see here a list of some of the many use cases our clients are using our toolset for. So once again, it's very diverse. Whatever the project is, TriZetech brings together the outside-in and inside-out perspective, tying the strategic and operational side of things. No matter where organizations are starting from, there's always a way to align strategy and operations for successful transformation. And the goal is always to create value for both the organization and the customer. Today's presentation will focus on how organizations are leveraging business standards to transform. In particular, we will go over how standard-based process and decision modeling are now used for automation purposes within the broad financial services transformation. However, these notations can be applied to almost any industry and type of organization. So let's have a look at our panelists today. A recognized thought leader in decision management, Brian Stuckey brings 3 decades of experience designing and implementing business rules and process management systems to the financial services industry, as well as the federal government. His consultancy firm, DecisionX, helps organizations leverage standards and emerging technology to drive their FinTech and RegTech digital evolution. Brian previously served at Freddie Mac, where he set the business and technology strategy for business rules development across the corporation. Brian is a contributing author to 3 decision management books. He currently serves on the editorial board of the Business Process Management Institute and has well over 60 publications in addition to his many speaking engagement at professional events. He is now in his 5th year as the co-chair of the MISMO Decision Management Community of Practice, and I know Brian is going to elaborate a little bit more on this, so I'm going to give him the full presentation control.
Thank you very much, Jonathan, for that introduction. I appreciate it very much. He said we're going to be talking about the ways I think we can start to look at using decision models to really transform what's happening in a lot of decision services. While we will be talking about the DMN, or the Decision Model and Notation Standard, this is not a primer or a training course on that standard. I want to be talking about how we can actually use what it's giving us in some very unique and powerful ways. TriZetech, who is sponsoring this webinar, has a series of these. I believe they have a library of past webinars on there. You can probably find several that are focused on training and how you build decision models. I'd certainly recommend you take a look over there. A large part of what I'll talk today is going to be rooted with examples from the mortgage industry and financial services generally. Partly that's because of where my background is coming from. However, I think you will find that the things we're talking about are going to be applicable across a variety of financial services and various other application areas. Jonathan kind of went through quite a bit about my background here. The only thing I will add to it is that I am a technician by training, but I've found myself immersed in the financial services world. I studied artificial intelligence the first time it got really popular, and suffered through, as many of us did, the AI winter, and I'm very excited to see it back again because I think it is something that offers us a great deal of power and some very interesting ways to apply it to the problems we currently face in various industries. So our agenda here briefly, I'm going to be talking a little bit about the DMN standard, just enough to give you an overview of a few things if it is new to you. I'm going to talk about MISMO that Jonathan mentioned, the MISMO, the Mortgage Industry Standards and Maintenance Organization, and then go into discussing standards, what they can do to us, and the key to all of this, I believe, which is the combination of technical and business standards, and then look at ways to use this to transform financial services. I'm going to look at 4 different areas where I think we can do that and give examples of some case studies with each of them. So we'll start with DMN. For years, business rules and business rule management systems have been extremely popular in financial services. I believe the first business rule system in the mortgage world was roughly 25 years ago at Countrywide Mortgage. It's hard to find a place right now that hasn't used them to some extent. The idea was pretty simple. If we can extract business knowledge and logic from an application, present it in a business-friendly way, and isolate it, we can make changes more rapidly without altering the rest of the application and let business users manage those changes. We got a lot of great successes out of it. Didn't quite get all the way there. We never quite turned over completely, so business users maintained everything. And frankly, it was a pretty expensive proposition, both in terms of the platforms and the expertise required to build it. There was also no compatibility between any of the platforms. They were operating on their own proprietary standards each time. The Object Management Group, or OMG, has been responsible for a lot of very common standards you may have run across over the years. UML, one, the Unified Markup Language, is not mentioned here. BPMN for business process, which you probably have heard of. CMMN for case management. And now DMN with the decision model. These are not solutions in and of themselves. These are tools. These are a language to describe operations. They're a way for you to apply to business problems. Thinking of it very simply, they're not giving you a picnic table, but they're giving you a hammer, a saw, and nails, and a way to go through and efficiently build something. Now, BPMN for business process is something, again, you may have been familiar with. I mean, it's really recognized as a global standard to represent structured work in graphical format. It's a deterministic sequence of guided work. You've come to the point now where there are a lot of different tools that support the standard. There are training programs, there are books, there are certifications. It is the de facto way to handle business process. Ultimately, I think we'll see the same thing happen with DMN. DMN, you can think of as a really key component, an inherent piece of a business process, whereas the process is describing structured work. A decision model identifies and models decisions separately from a process. The lower middle of this business process, there is a decision point to decide a treatment plan. It would be very difficult, it would be very ugly, it would be a very fragile solution if we tried to do that using a BPMN, and frankly, it's not a task that it's suited for. What we should do is be able to isolate those decision points out in some fashion and handle them separately. This is where DMN lives. The mission statement, if you will, was to provide a common notation that is readily understandable by all business users. You know, something that we can use by business users dealing with requirements all the way up through the technicians that are building, testing, and deploying out a solution. We're trying to use this to model human decision-making or requirements for it and ways to implement it. A very august panel of people have worked on this. You will notice names like IBM and Oracle. This has got full support of the major industry players and is a really significant development. I'm going to go in and talk a little bit about DMN. Now, again, I'm going to kind of tell you what it does and not go into great detail for how, since this really isn't meant to be a tutorial. The BPMN has got three what we call conformance levels. At the very top level, conformance level 1, you'll see a graphical notation, very similar to what you would see with business process. There are a handful of different widgets that have different meaning, where you're able to represent decisions, input data, sources of decisions or other kinds of data, business knowledge model that can be reusable components. But it's a very nice way for business users to go through and graphically display and build a concept of what their decision model would look like. Below that, we make use of a language that's called FEEL, which is the friendly enough expression language. And you don't really need to know much about that as far as DMN goes. But at the next level down for conformance level 2, we use the simplest level of FEEL, which is essentially doing decision tables. Decision tables that are able to represent, if you will, individual rules that are written to render a decision somewhere. At the very bottom level, conformance level 3, we can use the full FEEL language, which, if you can see, is looking to be a little bit more programmatic. This is probably an area that business users typically won't dip into, but it does give us some very powerful things to build out. For example, we might want a way to loop through all of the loans that exist in a pool. We may want to write some more complex functions that we'll reuse over and over, like calculating the monthly loan payment. So it's a very nice piece to have in there and really brings a full power across to the DMN standard. So again, the key point here is that this is really an inherent component to work with business process. When we can isolate decision points that exist within a process, we can say this is a point where a decision model should exist, model and build that separately. I think we have found that for most circumstances, the change will occur within the decision model, not in the business process. We certainly see less change there. Rather than having to disrupt that, we can isolate the majority of the change that occurs in nearly all business problems within the decision model itself and isolate it there. And again, do it in a way that is business friendly. It really brings us, I think, three important things here. Number one, a methodology. This gives us a rigor and an approach to use to do our decision modeling. If you sit down, we get the business analysts in a room and go to work. This is a great way to do it. I mean, I'll give an example later on of a decision model we have worked on that was able to isolate some problems that had previously not really been identified. But it provides a great framework around it and has proven to be very successful. Secondly, it's a technology. We have a way to implement and a way to actually execute something, a key component for us here. Lastly, and an area that we're going to be talking about a lot more, is in terms of exchange. You remember I mentioned earlier, one of the issues with the original business rule management system platforms is that there was no way for them to talk to each other. They were in proprietary languages. If somebody had a set of rules written in one business rule system, somebody else had the same exact set in a different platform, those were not usable by each other. With the standardized approach, we can start to look at ways to use exchange in a variety of very important and very powerful ways. So, a very simple example here that we've done to demonstrate, this is an overly simple loan origination process. Loan origination is certainly a process-heavy area of concern, but we can identify some decision points in there. And within these process models in the top left-hand corner of the box, you'll notice a little icon that is essentially identifying a decision is occurring there. So when we have that, we can move over to model a decision that is used at that particular part of the business process. In this case, to do a loan pre-qualification. And when we have that particular piece, we can build here a decision table that is able to render that for us. Just a quick little bit of decision table background here. Every row in this table represents an individual rule, and every column under inputs is an attribute or a piece of data that is used for it. The outputs on the right are what are a result of executing that rule successfully. So this is a really powerful method here, I think, to represent and work with decisions and work with rules. We are starting to see it pick up in its use. If you go look at Amazon, you'll find quite a few books on it now. There are some training programs. There are a lot of platforms on the market that accommodate it, including the TriCitech platform, who are hosting our webinar here today. So with that, let's go and talk a little bit about MISMO. This is part of the Mortgage Bankers Association, and it's representative of players in the mortgage industry who work to solve some mortgage industry problems and do it in terms of some standardization. So with MISMO, they've been developing technology standards to date just for data for both residential and commercial transactions, hoping to reduce costs and increase transparency. Very simply, what they've been doing, if you think of something like your typical mortgage application, there is a full XML representation of every possible element that can exist there and throughout the rest of the mortgage process. They are now working towards a JSON representation of that. They do it for residential mortgages, for commercial or multifamily mortgages, for e-mortgages. It's not an enforced standard. It is highly recommended. Right now, I know that for the government-sponsored entities, Freddie Mac and Fannie Mae, if you're submitting a loan to them, it has to be in the MISMO format. So its use is spreading rapidly, and it is the standard for the mortgage industry to represent loan data. So that gives us a very interesting thing that we can look at here, because BPMN on the left side here has as a key component of its mission to ensure that decision models are exchangeable across organizations. MISMO is now trying to standardize how the mortgage industry communicates, and they're driving standardized data and information. So both sides are really looking beyond the data and saying, how can we exchange? How can we make players within the same industries communicate? And that's our key to starting to look at something really powerful. To that end, we had a really exciting announcement, I guess exactly a month ago today, where MISMO, for the first time outside of their data standard, has recommended a technology standard for use within the mortgage industry, and that BPMN is going to be that. This was after studying this and working with it for a number of years, getting through all the hoops, the approval cycle of the major players in the industry, and this is the way that we are going. MISMO has been working towards providing training for its members, reference architectures, use cases, and it's a really exciting time for the field, and I was thrilled to see this announcement come out. I will expect that we will have one soon for BPMN as well. It is already a de facto standard. We will formally announce that one as well. The more we can get people going down the same path, the better. Now, why is that? Well, because I think standards are the key. We are really looking at a data-driven economy anymore. And the more that we can standardize all of this, the better. We have a rare opportunity with MISMO in that we have a well-defined, used, and studied business standard with MISMO that we can now couple with a technology standard with BPMN. Now, with the insurance industry, they have a standard called Accord, where I can believe we can do something very similar, and we've just started to take a look at that to see what it would look like. It's this combination of business and tech standards that gets me really excited. And why is that? Well, think about that now. First, we can take our MISMO standard, which is the XML representation that you'll see on the left, and take that XSD and create a similar structure to represent our input data in DMN. Something that we can take through and build. It's essentially in the field language, the same data structure, all of the data typing, all of the enumerations, everything else we need carried forward and then built and developed and set to go within DMN. That's important because what we have now is essentially, think of it as a language and a syntax. We can write rules, and we can write those rules in the language of our business. In fact, the very same language all the data is coming in for. Consequently, we can build, if you will, a message of a decision that is completely standardized for the data and for the execution of the decision that is shareable. It's a commodity, if you will, since it is expressed in a common format that can be exchanged between business partners. We've got a real simple example here where we have in fact created a table here in a model where we are dealing with the exact MISMO data elements to go through with all the data that are all the attributes that come with them and build a decision based on that. That is something we have yet to have in this industry or most others that I know of, and can be extremely powerful. And that's the key of why we're here. So with this great new powerful tool, what can we do? I mean, we know we get a great deal of traction just from having things like DMN and BPMN, that we've got a business and tech friendly standard that handles everything we need. We can better train and use our resources, and that's all great. And there's great benefits and uses just from that. But I think we can take a step up and look at doing a little bit more with it. I'd run across this last summer, and it just was a real striking headline to me, that there were a number of downgrades to JP Morgan Chase and some of their originator assessments. One of the reasons for that was noted as shortcomings in its technology infrastructure and gaps in its fintech. This is important stuff that people are looking at. I mean, they are expected to be able to handle this. In this case, they were actually relying too much on some correspondence, weren't doing enough of the underwriting themselves, but were delegating things and had no way to check what was going on. This is critical for us. We've identified a number of gaps right now that have existed with FinTech and with RegTech. Part of it has been dealing with bridging the gap between business and technology. We have to be able to explain why decisions were made. The GDPR, the General Data Protection Regulation in Europe, has actually specified as an article that companies have to explain to customers how machines made their decisions. I know Jenny Gagne from Trisotech has done a very great, wonderful presentation about explainable AI and using decision management for that. But we see some of the other same issues we've had here: uncertain regulatory landscapes, dealing with older systems, regulators that are unwilling to articulate things specifically, companies thinking locally instead of globally. But what we have found are several keys that are going to be necessary to move forward here: open API-based architectures, coordinated industry-wide design and collaboration to set clear standards, and essentially a way to create, modify, and exchange decisions in a transparent, common format. That's what we can start to get through from this combination of standards, I think. That's how important it is. So we're going to talk about 4 different areas here. The first one, I've just listed here simply as exchange, a way to enable exchange between trading partners, an enterprise and their clients, and even within large organizations. Secondly, with APIs and microservices. This is a huge area, certainly within the mortgage world right now. This can make automated decisioning accessible in new ways and actually help to level the playing field for businesses of all size. One thing I've mentioned before is in terms of business rules, it was really something that was limited to the very largest of companies. In terms of regulations, this would be a wonderful way with respect to decision models to promote for regulatory agencies to provide their compliance and their regulations. And we'll go through an interesting example of that. And lastly, for explanation and transparency, the key notion here is why can't we send a decision model along with the rest of our, say, our loan data and all of our processing data? Rather than saying, yes, I pass these rules, here's why, here's my decision model. Because we can standardize and exchange it, that opens up some very interesting doors for us. So let's talk about the idea for just simple exchange here. Any organization now, if we're looking at this combination of standards, we can really identify a couple of different ways that they might deploy a solution. They can just disseminate the rules. You know, think of a large library of decision models that are out there accessible, doing large and small problems that one might come into and access to pick and choose what they actually needed and run them on their own platforms. Or taking the API approach and being able to deploy a lot of services, decisions on demand, if you will, where we can make a lot of these behind APIs and available out. These can go out to a number, our own clients. They can go out within our own enterprises, but it's opening up a lot of doors now because of the standardization. We are no longer bound to our legacy systems. And it's the same idea, between trading partners on the left to deploy and disseminate these decision models in a variety of ways. And on the right, even within organizations, we have run across a lot of enterprises that are so large and are so geographically disparate that they are implementing the same things across their enterprise in multiple places on different platforms and cannot communicate effectively between them. This can help to start to break down silos and really make the companies more efficient, more productive, and most importantly, more consistent. And we'll go through and discuss some specific ways this exchange can happen as we move through these other areas. APIs and microservices, I perhaps should have gone to last because I think this is maybe the most important one out here. This quote here was from Nathaniel Palmer at BPM Next of last year, where he's really projecting to look forward that decisions as a service for commercial and government are going to be the primary delivery model going forward. Plug in and use what you need. More of a business first model driven approach rather than building this stuff in code. Keep these things out and have them modeled, and this next step in our evolution to have decisions as a service. I won't go into a great primer either here in terms of APIs and microservices. I'm sure you've heard of these terms a little bit. APIs are really specifying a way for a developer to write in their program a way to access or request services. Microservices are really the thought of deploying a lot of different components, a lot of different widgets, if you will, composite apps that you can pull and use the pieces as building blocks or Legos together to build something bigger. My argument here is going to be, firstly, by standardizing a message with both the data and the structure, like we have with MISMO and DMN, we can facilitate the creation of APIs. We know what the data look like is coming in. We know how to execute that within that model on that standardized approach, and they can really facilitate the way the APIs are structured. Now, DMN for microservices is a no-brainer. We can build out a big decision model. We can build a fine-grained one as small as you want to access whatever area somebody might possibly want. Just yesterday, there was something published out in a survey done by Fannie Mae that according to 63% of senior mortgage executives, APIs was the most important thing necessary to them to streamline processes. This is what they are looking at. This is what they need. I've been hit up many times where somebody will come up and hold their hands, you know, as wide as they can and say, right now I have to send this much data and I get this much back. And then they'll hold their fingers about a ½ inch apart and say, I want to send this much and get this much back. How can I do it? This is how we can start to approach that. So I'm going to give you a very simple idea of one to demonstrate this. We built a very small decision model. This would indeed be a microservice. It's called the application threshold. There is one part of the processing step that says there are 6 data elements: name, income, social security number, property address, value, and loan amount that must be present to process a loan. That's all it does, is this data there. Very simple model to go through and build. We have the ability now to take that model and immediately deploy it out. And this model is again built with the MISMO data standard incorporated in it. We can deploy out a variety of different APIs, a REST API, Open API based on Swagger, throughout a form, through to test environments that are giving us a URL, in this case, to go through and execute it. And then we can take and run that. And in this case, we have run this and we've taken a loan in MISMO format, downloaded directly from the Freddie Mac website against this model. And at the lower part, you can see that the results in here, we can see the results from each sub decision on the way, and then our final one that in this case we passed. We did no work to that loan coming in. We just knew it was a MISMO loan and said, good, we can take this, import it, and run it. If we needed to make a small change in that, we could redeploy that very quickly and nothing else would have to change in terms of the calling API or anything else associated with it. A very transparent, fast, easy way to go through and throw out, in this case, a microservice. So that starts to look at the idea of building, say, a digital mortgage library, a whole library of services available out there. Let's see, we had a mortgage service library with these top levels, fairly large services, but we wanted to go through and look specifically at origination. Well, now we've got a number of smaller areas underneath this, and we may want all of those for something that we're doing. Or in fact, we may want to go down a little bit lower and let's go to pre-qualification. And let's go for very small sets of rules down here that are within that. And in that library, pick out and find those services that we need. These can be built out and deployed by the business people, by organizations that are capable of developing these properly, build them according to the standards, and make them available within an organization or outside of it. This is something we are currently working on with this idea, again, of commoditizing decision models. The combination of business and technology standards really makes that something available to us. Regulations. We live in a world of regulations in the mortgage industry and pretty much every other one at every step of the way. Following the mortgage crisis in 2008, there were even more that came about for the mortgage world. They're changing constantly. They are at about every level of the process that you could possibly imagine. Now, I'll be picking on CFPB a couple of times just because they're a good relevant example, but what's going on there is going on at a number of other regulatory agencies. It's not just them, but they provide us some good use cases to look at. As part of CFPB, the Consumer Finance Protection Bureau, there is something called the Home Mortgage Disclosure Act, HMDA or HMDA, that requires a bit of reporting. And by a bit, I mean a lot of reporting about the scope of information relating to mortgage application and loans that has to be collected on an annual basis. What we get here, and on the left is, I just took an example of a page from the regulation. It is largely textual. You will see some tables like this from time to time. I'm not so much interested in showing you this particular example for what's in it as I am for page number. This is page 652 out of about 800. That must be read, interpreted, understood, and then implemented in some fashion by every lender. This is an onerous task. It's a long regulation. It is changing all the time, constantly. There are annual updates, and some happen even sooner. You've got to consume it, interpret it, and get it ready to go in a timely fashion. And as you would guess, it is a time and resource-intensive operation. I've seen companies now that are actually providing project plans to lending institutions just to deal with reporting for this particular regulation. When you start, how many people you need to dedicate to it, not part-time, but dedicate. There's a lot of work that goes into us, and this is only one organization and one piece of it. So, you know, that immediately starts to make us think, what can we do to make this easier? Well, as part of their process, and you know, the data collection process certainly looks nice and easy from here, but that circle box in there is enter all your data into a specified format and then go file it and fix errors. Well, that specified format is covering 110 different data elements, and it's not just picking them off, but rather it turns out there's a lot that goes into determining what you send back. And if you don't enter in the prescribed formats, do you go back and do it again? MISMO has done a lot of work in terms of just interpreting this rule. And this is some of the work that was done there. And as you can see, you've kind of got sort of some pseudo-looking rules here. You know, where this particular field is one of these, and we will use this. This is for field 10, the loan amount. There are, I think, 8 possible values that you might report for the loan amount, depending on the kind of loan that you have. You end up returning what's called a LAR, or a loan application register, which is simply for every loan, value, pipe value, pipe value, pipe value for 110 data elements. Some onerable work. However, when you take and look at something like this, you see that this starts to fit very nicely into a DMN approach. That text on the previous page, which came from the text in a written document, can end up looking something like this in a decision table that is pretty darn friendly, easy to update, easy to understand. We can reference the exact MISMO elements and referencing things in a very friendly fashion. So that's great. What's the key here? Well, what if the regulations were transmitted in a DMN format? You know, here's this decision model, and this is just covering, I think, 5 of the fields we have to report. And I embedded the little box at the top, so you see it's nothing more than concatenating a string of value, pipe down the field. You have the ability in DMN platforms, certainly in Trisotech, to do an export. This decision model, all the data elements, everything else in it, can be exported to a .dmn file. That file can be imported into any other DMN compliant platform. And there are, you know, several, probably approaching 40 platforms on the market. Legacy platforms have been set up so they can handle the DMN standard. If that file can be distributed, that would handle this entire decision model for reporting. We have just come up with a way to simplify this task for all of the reporting agencies. We have found a way to make it incredibly consistent for all of the reporting agencies, and the reporting burden for analyzing results at the end for the CFPB or any other agency can be done in a much easier fashion. It saves money, it saves time, it promotes efficiency. We've had discussions with some of the agencies. I think they know it's the right way to go. Getting them to do it is the next step. But even think smaller, you know, lending regulations for any lender and sending things out to all of their brokers can be distributed very easy. There's a number of places that we can think smaller to get rolled up to the bigger one, but this is an incredibly powerful use of the standard. Lastly, we'll talk about explanation and transparency. Certainly, blockchain has been a big topic in emerging tech for the mortgage industry. What we'll talk about here can be a blockchain component, but doesn't necessarily need to be. We have, this is a very high level diagram that kind of shows data and funds flow in a loan life cycle for a securitization process. All of the pinkish arrows there where data is being transferred between various parties in the loan life cycle.
I'm unable to answer your question.
There is a lot of work that is currently being done right now in terms of working towards a fully digital mortgage. But there are decisions being made at every step of the process here. And a lot of the times the results, when they go to the next step, we are assuming we have passed something important at a previous state, or we have taken a certification saying, yeah, I passed what happened earlier. The fact of the matter is that that's not always the case. And we know many cases where somebody will get a result and say, I'm not passing that. You said we did. Why not? What happened there? And that's a real issue. So we're going to take a look at another CFPB rule. Since we're already picking on them some today, we will a little bit further. Won't go into great detail, but another rule that came out after the 2008 crisis was called the ability to repay in qualified mortgage rule, which simply is doing a good faith determination of a consumer's ability to repay their loan. I'm sure, you know, if you saw any of the movies, the books around that mortgage crisis in 2008, all the stories of lenders that were giving loans to people that really had no business getting them, that there was no way they were going to be able to repay them, certainly after a balloon payment blew up. This is one of the things that was done to helpfully make sure that we can have a good faith idea that this is something that this borrower can repay. Well, once again, this turns out that you can do another good bit of work here in terms of MISMO data elements and in terms of a DMN model to start to go through and build out everything that's necessary within this. Again, easily understood, easily modified. Now, this is an example I referred to earlier. In working on this, we did find out, and this was part of the rigor that the methodology in DMN gives you, there were some missing data elements that were not part of the standard MISMO data model, but were required for this. And it's forcing us to go back and take a look and perhaps make some changes to make sure those elements are accounted for. Again, we can build out a fairly, this is a little bit more complex model, but you know, the same concept works out here. We can build a model to accurately go through and build what has to go into this decision. So we can render it, we can say, yes, we passed it, and move to the next step should it pass. But as we saw before, number one, we could put this behind a service, or number two, we could export and send this file along with us. So in fact, what if, as we move through all of these steps, along with sending the loan data, instead of a certification that we passed something, we send the decision itself and say, yes, we passed, here is what I ran. Every step of the process that goes along. If this is in fact going to be part of a bigger blockchain, this can be part of the blockchain message itself. So we know that we've got an immutable piece of the ledger there that's going to tell us this is what we did, this is why we did it. You know, we are checking the checker, if you will, to make sure that that was done properly. We can take a look back at that model. We have full explanation. We have full transparency. Another way to make this process far more efficient and far less expensive, and in many ways far more automated where it makes sense to have it automated. And that's a really important key for us. We'll finish off on a couple of closing thoughts here. Excuse me. I mean, we're at a really exciting time in this digital evolution. Emerging tech is a big discussion point for everyone, and so many interesting ways to take care of it. One of the things that we often discuss and we haven't here are, you know, three of the emerging techs you might think of more often in terms of AI or machine learning, robotic process automation, and blockchain. I think decision models will play a key role for all three of these. With AI, standardized data, because of all the data we're using, is really important. And as I alluded to earlier, the idea of explainable AI by having decision management go along with it to represent what's happening is really important. There is certainly no regulatory agency at this point that would accept the results of a machine learning operation by simply saying, well, my black box told me to, and that's why I did it. Explanation of those decisions, which can be rendered in a decision model to make it transparent, can be important. Robotic process automation, certainly the ability in some of the cases to move some automation to decision models, to incorporate that as part of the, to integrate with the processes can be really key. Blockchain, you know, there's two interesting things here. We talked about one where a decision model can be part of the message. We can also look at using BPMN in terms of smart contracts or a self-executing contract by being able to handle the logic itself. And I believe there's some work that's going on right now and to examine some of that. Within the mortgage industry, there has been some very recent work to look at a couple of things in some of their surveys, and this was done by the MISMO and MBA organization to look at the future in terms of value versus collaboration. Two of the areas we see here are data standards and what they've called a business reference model and rules. High collaboration areas, which is key, but pretty high industry value. Same kind of thing happens in their scale for looking at feasibility versus adoption. Data standards over here, rules very high up. They're feasible and highly likely to be adopted. So these areas are important. They're going to be looked at. They need to be examined because they're key. And just one last thought I would give you so you don't necessarily get lost in the AI world and everything that we need there. Forrester Research ranked decision management as the top AI technology with respect to business value add over the next 5 to 10 years. This is crucial stuff. It's foundational. It's a building block. It can touch all of these areas we're talking about that really give us a big key up and a leg up into making these implementations and applications very, very successful. With that, I'll thank you all for your time. I believe we left some time here for questions. You know, there's a lot of exciting stuff going on right now. There are some great tools on the market. These standards that we are getting right now are making this they're making it possible, and that to me makes this a really exciting time to be in our respective industries. So thank you very much. And Jonathan, I guess if you've got some questions there.
Absolutely. Thank you very much, Brian. Well, in fact, I received a couple of questions at the beginning of your presentation, but you pretty much covered all the topics. So we had here a few about the integration of decision modeling or decision management at large with new technologies. So you've covered it within your last few slides. There were also some questions about how standards can increase transparency. I think we've went over this pretty much. So I guess the other questions are a lot more specific. So I believe that we've covered it all. I don't know if there's anything else you wanted to go back over. Oh, I'm sorry. We have one last question that just popped in. And maybe this one is something that we want to go over. And the question is from, I'm sorry, question here is from Doris. How do you convince leaders of the importance of decision management?
I mean, that's always a great question for any of these technologies here. One of the things that I've always found successful in the past in doing is to take the pain points you are currently experiencing or that you're facing, whether it be something you can't do or something you want to do better or something new you want to do, and then pair that up with the capabilities of something like decision management, whether it's business involvement, you know, being able to be more agile in updating the decisions, whether it's a way to facilitate the exchange between industry players. I mean, there's been so many successes to a certain point with straight business rules. This next step up, you know, in some ways that makes it a lot easier for us with decision management. But so often the pain points that you are currently experiencing are going to match up really nicely with the capabilities of something like BPMN.
Perfect. Thank you very much. So I hope this answered your question, Doris.
And I would add also there are a lot of good case studies. So if you look at some of the stuff, some of the folks that have used FINTECH or in other industries, you can see a ton of great successes that have occurred so far, which is always a big selling point for your management.
Yes, absolutely. And this brings me back to one question that we got at the beginning, and maybe we can elaborate a little bit more on that. And the question was, what's the argument that would bring value to both the business and the IT side of, because sometimes it's one at the expense of the other, and so rarely do we see value for both at the same time.
Absolutely. So, what you will often run into is your business side throwing over the wall all the requirements you got, and in many cases leaving it up to the IT staff to try to interpret it before they go to implement. And, they're not the ones that should be doing the interpretation. This is really, if you want to think about it, something like DMN, and particularly when you've got the technical and business standards incorporated together like we can have with MISMO. It's self-documenting, it's self-explanatory. It's the requirements all right there. So there really is very little interpretation that needs to be done. And it really bridges the gap between business and IT. And I think makes life a whole lot easier because you've essentially got a common platform to which they can both speak. And that, as opposed to say a set of, use cases and requirements and then having a bunch of Java code doesn't always work out that well. Here it can. If you throw a process and a decision model down, it's pretty clear for everybody.
Absolutely. Well, I guess this concludes it. So thank you very much, Brian, for this great presentation. Everybody in the room will send the recording, the replay link a little bit later today. Once again, thank you very much, Brian.
Thank you. My pleasure. Thank you all.